Hello, this is Jordan. This video is being recorded on the evening of Wednesday, June 7th, 2023. Thank you so much for joining me. Please, if you haven't already, please subscribe to the channel. I would really appreciate it. You don't want to miss all the great info that's coming. Thank you. And on this video, I'm going to do a deep dive, only in one chart, but a deep dive on silver, much deeper than what I usually do. Now, recently I did a deep dive video on gold as far as technical analysis, so I'm doing something similar with respect to silver. And I like doing these videos when I have something to say, which I think is meaningful, maybe a new insight comes to me, that sort of thing. And if my mic sounds different, I apologize. I'm on the road, but wanted to get this video out to you guys. So looking at silver, this is a weekly line chart. And so I like that because when you're looking at real long-term chart and you're trying to get a sense of what are the key levels, using weekly closing prices, I think is perfect because daily closing prices, there's too much data. If you use weekly candles, the candles can obfuscate things. Monthly line, yeah, you can, but I like a little bit more data than that. So that's how and why I arrived at a weekly line chart here. But anyway, first I'm going to talk about the price action. Then at the bottom, the COT stuff, the net spec position and open interest. So looking at the price action, let's start with that black moving average line. This is the equivalent or rough equivalent of an 80-month moving average. And why do I have that moving average there? Why not the 40, the 20, or the 60, 100, whatever? Well, I like looking at moving averages that provide support and resistance at key points. And so look at this black line and this moving average. This was resistance 2002, early 2003, before that bull market really started to get going. Then you had the big financial crisis, the huge decline in silver 2008. Well, it bottomed at that moving average. You see the black arrow again. And most recently, the low towards the end of 2022. Remember, silver actually bottomed first. It went below the 80-month moving average, but if you look at a monthly chart, my guess is maybe it didn't close below it, or if it did close below it, not by much. So that is an important line of support. It's currently at, let's just round up and say 1980. So that is a potential line of support over the weeks and months ahead for silver. And this is also important because if you look at the blue line there with the blue arrows, let's call it 2050. That is also a very significant level. 2008, or the peak in 2008 before the GFC, was right at that level. And the 2016, the big pop there, it peaked right at the same level. And we can see, the second low, the higher low, you go back to the beginning of this year, 2023, that low was at the same level. So that's significant. You have that low, and then you have the 80-month moving average coming into play. So there's a confluence of major, strong long-term support right around 20. You want to be a bull, you can say 2050 in that line that I'm mentioning. Also, if you go back to 1980, silver had a rally, I think, in the middle of its crash, or towards the end, had the big crash, then it had a rally, then it went to a lower low. That rally came up and peaked around 22. So I've also said that 22 is an important level. So that'll be something to keep in mind moving forward. But for me, 2050 on the weekly chart here, that's a real key. So moving on, the key resistance is that red line at 2750. Or, you could call it 27, you could call it 28. And so interestingly, I have a thin red line right below that. So call it, 25 and change. I think it probably, or maybe it's close to 26. I think it hit 26 intraday, or maybe even closed there for a day or two. That is obviously a key level. If we really want to, zoom in, we would say, resistance at 26, support at 22, but giving it a wider look, the key levels are that resistance at 27.28, then the support at 20.50. And so potentially one scenario is you see precious metals trade lower for a little while, silver comes down to that level again, or who knows? We'd love to see it bottom at 22 instead of 20.50, but I suspect it's going to test one of those levels before it has a chance to get back to 26, 27. Hope I'm wrong about that. If there's a banking panic or something happens, whatever. I mean, it's really dependent on gold. Silver is a beta play on gold. It never has traded like an industrial metal, like really never, based on my research. So that's kind of what my sense is. That's probably going to go lower before it has a chance to test and break those red lines. I'm seeing a lot of down trend lines. From 50. You're looking at the bar charts at 2020 with these trend lines in silver. We're seeing these constant. These people post these on Twitter. Oh, there's a breakout, and then it doesn't do anything. So, those lines to me really don't matter. You have to focus more on the key horizontal levels. So I've said enough about the price here. So let's go to the bottom and talk about the COT. So we have the net spec position there, and that's just the net speculative position, all the non-commercial positions divided by the open interest. So I like doing that. It gives a consistent look over time. Then you have open interest at the bottom. And the important thing to note about the silver COT, it's not as uniform as gold's. Like at gold's, it's pretty obvious where, the specs, the spec position is really high. Gold's going to be near a peak, and then it comes down. Spec position is low. It aligns with major bottoms. Silver, it's a little different because look how high the net spec position was in the early 2000s. It was really high, and then the net spec position was much lower, 2012, 2013. Silver kept going down. So, but still, in a shorter, medium-term sense, it's still important to look at. And so, it's really interesting. Go down to open interest. Open interest came down 56% in 2008. That came down at that point. It was pretty close to around a 6-year low. So that was a market that really got cleaned out. And I think, potentially we saw something similar at the low late last year. Open interest was down 51%. But if you look at that, it's 51% from the peak, but that was like at a 10-year low. And if you look at the net spec position at that point in time, I think it was the third lowest in its history, net spec position as a percentage of open interest. So, of course, silver got the rally. It pulled back. It went higher. Now we're correcting again. And so I showed the two circles there, the most recent low. Net spec position was still under 10%. Open interest was still not, moved up, but it hadn't moved up that much. So basically, what the COT is telling me is, if I'm right and this market will continue to correct and be weak for a few months, the COT, it's nowhere near extended. And if that forecast is right, you're going to see not tons of money come out of silver, but just a little bit more money here and there. Because there's not that much in silver to begin with. So that's basically the way I see it. Nothing terribly new or novel here, but it's just the fact that you have that resistance at 27.28, and then right around $20, call it 20.50. Those are the key levels. And remember that silver, look, it's going to follow gold. Gold breaks out. Then silver is going to be primed to break above 27.28 and move much higher. And those moves happen quickly. So silver could do nothing for another 3 or 6 months, and then it could pop to 40 in 6 or 8 months from that point. So let me know what you think in the comments. Thank you so much for tuning in. And I'll definitely do another one of these videos over the coming months, especially if something changes. Thank you for tuning in. Talk to you guys again in the next video.